Keith, how are you, man?
Today's the best day of my life, Ben. How you doing?
Let's go. I got to match that energy. Today is the best day of my life. And I hope everyone watching this, it's the exact same. We've got another banger episode for you. We have a short news section that we'll lead off with, and then we're going to dive deep into Ethereum, which is about to be something that you're going to be seeing on all your TV screens quite a bit. And so we're going to try to walk through the whole Ethereum story so that you can be brought up to speed as soon as possible on a technology that's going to be very prevalent in the not too distant future. So, Keith, I'll hand the floor over to you. Hit me with the news, man.
Yeah, man. One very small news headline that we have today in the United States, which is that we are currently experiencing a US government shutdown. So, the big question here is what does that really mean? So, essentially, what's happened here is Congress is supposed to come together to come up with a budget for the federal government. And every once in a while, they will fail to come to agreement about what that budget actually is. And currently, as of last night, before the beginning of October, Congress failed to come to an agreement around funding legislation. And with that, essentially, the suspension of all non essential operations and services is in effect until funding is restored. And so, the interesting thing about this is like, essential services such as things related to like national security or air traffic control and public safety will generally continue. Okay. But all other federal activities that are not deemed essential are paused. Now,
Mm,
on top of that, these essential government employees are technically they're not going to get paid until this gets figured out. But in between, then, right, like their pay stacks up. And so whenever we get this funding gap filled, they will get their payment for the time that they spent working. So, um, a sensitive situation here. This happens every once in a while in the US. It happened again, I think, also in 2018. And it was actually for like a month or so that it went on for. So we'll see what happens here. We definitely have a government that is a little bit more extreme than normal. So with that, who knows really how this actually ends up playing out.
dang, that's intense. I'm in Canada, so not too familiar with that happening there. But is there any sort of threat of things getting bad really quickly? Because if people just decide not to work because they're not getting paid, and there's no guarantee that they get paid, could that not lead to a very bad situation pretty quickly?
It absolutely could. There's actually been a lot of like conspiracies going around about this, and like there was someone that I saw, this guy named Texas Paul or something like a week ago, was talking about how everything in the United States is going to change after this. We've had a lot of like mobilization of the military over the past few months as well. So like there's kind of this, thought of are we about to kind of like move into this militarily kind of controlled United States, or what's going on that side of things too? So hey, we'll see what happens.
Dang. Okay. Well, I'd love to hear everyone's thoughts. Please share them in the comments of this one. And if you're watching a clip, please share. I want to hear your thoughts in the comments because I want to hear everyone's perspective. So hopefully we can get the most amount of information possible. But that's the news. We'll keep an eye on it and we'll give you updates as they come. Hopefully there are updates sooner rather than later because it seems like without them, that could get pretty bad.
Yeah, usually it's in everyone's best interest, right, to get this thing figured out. So I think Congress will get that done, and we'll see what happens. But the other piece of that news is that so far, crypto is up. We got Bitcoin sitting at 117,000, up 3% on the day. We've got Ethereum up at 43.38, up almost 5% on the day. So Ethereum actually likes us even more than Bitcoin.
See, that's something that I think would puzzle a lot of people. Why would prices go up on news like this? I think from an outsider's perspective, you'd think it'd be the total opposite.
Yeah, I mean, when you look at risk assets in general, right? If you have anything that's an issue inside the government, usually you're going to take a risk off of the table.
Hmm.
So in this situation, I think what we could be looking at here is a potential leaning towards uh, alternatives to your traditional system, and that being a little bit of a safe haven in a moment like this. So crypto, in a sense, acting like a gold almost.
Totally. Yeah, and I've actually had this discussion with a lot of people where like, a lot of my friends who are very, "Oh, crypto will never run again," kind of thing. Their usual arguments are that people don't have money. And I was like, "Well, a few people have all the money. So as long as we get them involved, then price will move for one. And two, much like you were saying, if people have kind of looked at the old traditional system and have totally changed how they see it, and they now see that as risky, I actually think that might lead to FOMO into these things because it's kind of got that connotation in terms of anti-establishment or maybe new establishment, whatever it may be. And this may be the first sign in that being an accurate prediction, but who knows? We'll see.
Yeah, and it's interesting because crypto likes to kind of do whatever it wants, to be honest. Like sometimes it'll be highly correlated with the Nasdaq, and sometimes it won't. And sometime, at least this year, we've seen two different instances. I think where we had like the bond market in the U.S. kind of going down and stocks going down, but like crypto was like doing okay. It like didn't sell off the way that you would expect in those types
Hmm.
of environments, and so. Uh, it could be that we're seeing more of this as this asset class continues to mature, but so far, it's definitely not something you want to bet your life savings on. Crypto continuing to go up during a government shutdown.
Yeah, exactly. We'll see the long tail of this, but I think that perfectly segues into our primary topic for this is that I think that the whole asset class in general is becoming a lot more legitimized, partially because of legislation, regulation, et cetera, but also because of one asset that we're going to walk through here, which is Ethereum, right? Because Ethereum allows the whole concept of blockchain technology to really be brought to practical use from both like for industry, for consumers. There's a lot more application here because it's not just like Bitcoin, which is more of a store or transfer of value. And so you're going to start hearing Ethereum a lot. You're going to start hearing the figures involved with Ethereum. You're going to be hearing digital gold, digital oil thrown around a lot. And so we're going to try to walk through, give you the rundown on all things Ethereum. So where should we start, Keith?
Yeah, I think the first place to start is to really just talk about the fundamentals of why Ethereum is so different than Bitcoin, right? Bitcoin, a lot of people are not huge fans of Bitcoin that are deep into crypto because it kind of feels like it doesn't do anything, right? Like you kind of just buy it and hold it and that's it. Now, in a sense, I think that's a little bit misleading to kind of just say it's just a pet rock and it doesn't do anything because, in a sense, the different components that make up Bitcoin is a very powerful mechanism in and of itself. And the security of the blockchain is what makes it so important in terms of where it sits in the digital asset ecosystem. Without proof of work, uh, not to say that proof of work is the end all be all, the answer to everything, but it does provide a level of security that no other network really has in that regard. So, quickly here, you have the blockchain trilemma. You have the security, you have the scalability, and then you have my goodness, the decentralization of the crypto of the blockchain that you're using. And this is actually something that was invented by Vitalik Buterin, who is the founder of the Ethereum blockchain. So the blockchain trilemma there, once again, just to be super clear, you have scalability as one of the three things on the triangle. You have decentralization, and then you have scalability and security. My goodness, security, scalability, decentralization. And so the reason that this matters is because each blockchain that you're using is going to have some sort of a trade-off in those ways. So for instance, with Bitcoin, the number one thing is the security and decentralization. But with that, you have a lack of the scalability. So Bitcoin processes transactions essentially, depending upon how congested the network is, it can take up to an hour, for instance, for your transactions to actually go through on Bitcoin. And so it sacrifices scalability for security and decentralization. And Ethereum has actually evolved in the way that it handles all of this throughout time. But anyways, kind of went on a little bit of a tangent. The major thing to think about with Bitcoin is that it's purely just a blockchain. You can transact over the network and that's about it. But with Ethereum, you have this concept of smart contracts where you have actual programmability with what you can do on the blockchain. So you can set smart contracts that say that only if this, then that will occur and have this conditional logic that you could with a normal programming language. Sorry.
No, you're good. Great segue. Always go on those tangents. That's some of the best sauce we get is when you go down those. So always feel free. And one word that you said there that I think is important for us to explain is you mentioned a concept of proof of work. Can you explain to people who have never heard that before what that means and why that's important?
Yeah. So from a fundamental perspective, proof of work is essentially you have all of these computers around the world that are trying to solve an equation in a competition, right? So whoever solves this random number generating type of equation first actually will receive a reward for that. In this sense, it's in the form of a Bitcoin. So that's kind of the fundamentals of what proof of work is all about. You're giving
Hmm.
up computational resources and real world energy in order to create this thing called a Bitcoin. And that is essentially what the proof of work mechanism is.
Totally. And that's how this whole ecosystem really grew is that there was incentives for it to grow and for the purpose of decentralization and the whole system being safer, like it being facilitated by these people who were getting financially compensated if they were able to do that. That's really how things grew, is because Bitcoin mining is still a big thing, and it was like it'll increasingly be so until there aren't Bitcoin left. But it's a big thing that really is at the core foundation of what makes Bitcoin Bitcoin. And so with Ethereum, one point you mentioned there, Keith, which is super important to remember, is that smart contracts is really like the golden thing you want to understand when it comes to Ethereum, is the fact that it basically gives a lot more practical utility to what a blockchain can do. And so I loved how you said, if this, then that. Like if you really think about most software in the world, that's really all that it's doing, is some sort of complex if this, then that scenario. And so you can basically modernize a lot of the applications from both our financial system, our communication systems, to be ideally more decentralized through something like Ethereum.
Exactly, exactly. Because it's a good question. Like the question that I hear being asked is like, okay, but why do you need Ethereum to do this? Like, couldn't you just do this with a traditional application? And the answer to that is yes, but without the same decentralization that you get from Ethereum. And now the decentralization has a few different functions. I mean, first off, you can now create these transactions without having a central intermediary of any kind. You don't need a
Mm,
bank, you don't need a government, you don't need a central bank, none of that. You can have those same types of transactions to occur without those institutions involved. So that's one of the major things that decentralization gives you. The other thing is it also provides a global marketplace for different types of assets. So for instance, you have a global pool of liquidity for things like stablecoins or even for Ethereum, where you can actually go out and potentially lend out your Ethereum using decentralized finance protocols, which operate on smart contracts without, once again, any sort of intermediary whatsoever. And so with that, you have these pools of liquidity that exist outside of the traditional financial system where the supply and demand for these assets is actually set by the market and not by institutions who are involved in that process of creating and defining value.
totally. Yeah. So that's also why the connection between digital oil comes into play, because it's a lot like
Mhm.
how oil regulates most of the economy that we have today. But in theory, if this is more decentralized, it would have less price manipulation for political incentives. That's the idea. Again, who knows how long that's maintained, but at least that is the concept that will make sense to people. And also, I want to make a point here before I move on to my next one, is if you're listening to this, we are going to have to say words you won't understand. And so if we come across a word that you don't get discouraged. Just pause the video and then go Google the definition or ask ChatGPT the definition. So that way you can move forward on the points, because understanding this stuff is really, really important. But there are some basic terms that are unavoidable that we have to say that aren't in other spaces of your life. So I just wanted to say that, like, don't click away because you don't understand the words, because that's going to happen regardless for us to explain the topics. So
Yeah,
go ahead.
and let us know in the comments when you do hear that, because we'll always be trying to do our best to talk in terms that make sense for everyone. Like the whole point here is to learn. So let us know.
Totally. Great point. Yeah. If there's something you don't know, just say it out loud. Hopefully, someone from the community will help you, or we will help you too. So, the next thing I want to go to when it comes to this, too, on topic before we dive into the timeline of Ethereum, is the fact that in a smart contract, you can really create proof of ownership as well, right? Whereas if you think about most things and how the world is conducted, a lot of it's just made up, right? Like when we say someone owns a home, like what really constitutes the ownership of the home, right?
Mhm.
Is it some piece of paper that says this person owns it? Like how corruptible is that potentially, right? In terms of either losing it getting damaged in a flood, or someone deliberately falsifying that document. All of those things become, in theory, impossible through a smart contract, because it is self-governing to basically express digital scarcity and ownership, which is only really possible through something like this, which is why it's such a big deal. If you think about how most of the major assets are owned, it's kind of like, I got this piece of paper that says so. That's kind of it, and then it's backed by the system that gave them the piece of paper. That's a lot more fragile than I think people realize. And I think the more people are educated on this whole thing, and they start to ask questions in terms of like, how do I prove I own my house? And all those things, you'll see that this is just a superior mechanism of doing a lot of those things.
Yeah, I think that's probably one of the most powerful things that a smart contract platform enables, and I'm glad you pointed that out. When you think about, for instance, like you've said with your the deed to your home in the United States, at least you have a central registry at your county that is responsible for like keeping the document of who owns what land. And the thing is that like depending upon where you live in the world, uh, you recognize that this is actually problematic because there have been plenty of times throughout history where these records are altered, where they are corrupted, and it's because there's a central place where someone can just go and change the record, right? And what a blockchain enables is it prevents, first off, from any one particular person from being able to change any record. The only way that you can change a record on a blockchain, due to the fact that everything is linearly, essentially designed to where a blockchain, right, is a chain of blocks, and each block that comes after the next one refers back to the previous block. So you have to go all the way back to the beginning to be able to essentially corrupt the chain and the flow, which you can't do essentially due to the resources that it would take to be able to do that. So instead, the only way for things to change in these ecosystems is for every single person, or at least 51% in the case of Bitcoin, actually agree to go back and change these things. And we'll talk about how that has taken place throughout the history of Ethereum in particular. But yeah, so in a decentralized system like that, there is no one person that can be corrupted. And there is no really changing the record anyways. You can only update it moving forward. And in that case, people must agree upon those things.
Totally. Yeah, that's great foundational knowledge there to understand the concept associated with it. So where do you want to dive through? Because we have this sheet. We have Keith made this whole awesome sheet of a timeline of Ethereum to bring us up to today. Where do you want to start?
Yeah, I think it's kind of cool to start off with the actual origins here. We talk a lot about this guy named Vitalik Buterin. And back in 2013, there was this 19-year-old programmer, and he was actually a co-founder of Bitcoin Magazine. I didn't know that before. He began thinking about how Bitcoin was too limited. By the way, this guy's a Russian programmer, and he's 19. And so he realized that like Bitcoin's great for money transfers and like the store value kind of concept. But even then, Bitcoin was really early on, so you couldn't really call it a store value just yet. But Vitalik, he wanted a blockchain that could run programmable applications and not just send things back and forth. And so in late 2013, he actually published a white paper, which was the white paper for Ethereum, describing a world computer where developers could build decentralized applications to use smart contracts. Now, this kid's 19 years old, right?
That's
So,
crazy.
like, this is wild. um, that he's kind of just come up with this idea of how to like create what I call like blockchain 2.0, right? Um, and also worth noting that this was around 5 years after the original Bitcoin white paper was released. So I find that a pretty short timeline. I mean, think about it. If it was 5 years before then and he was 19 when he launched it, then he would have been like what, 14 years old or something when Bitcoin came out. And all of a sudden he's like inventing the entire space. Anyways, so kid's a genius, and he still plays a very large role in the Ethereum landscape today as kind of like the head kind of guy. And this is an important thing as well, as kind of like break down like how these blockchain foundations work, and like who really is in control of all of this stuff, or how it gets developed. Because when it's early on like this, it's actually a lot more convoluted and it's not as decentralized as we want it to be. So we can kind of move into that a little bit if you don't have anything else that you want to add on that.
No, that's very important to know, and we'll walk through who the founding team was because most of them are no longer there, but they're very much still relevant in the world of crypto. So we'll tease future episodes as we go throughout this one. But one cool little thing here is that Vitalik also went to school in Canada. He actually
Oh,
went
wow.
to he went to university like 20 minutes from where I went to university, and we were there at the same time for like a
Whoa.
tiny little window. So I could have been around him. So that would have been pretty crazy, but I definitely wasn't. But what else? What else you want to go to next in the timeline?
That's actually wild. Yeah, so let's talk about that early team, because although he released the white paper, Vitalik didn't necessarily build out the entire thing by himself. In 2014, he was actually joined by several different co-founders, including again a guy named Gavin Wood, who wrote the Ethereum yellow paper and actually defined the programming language Solidity, which, by the way, is huge today. It's used not only on Ethereum but also for other EVM compatible blockchain applications. And Gavin Wood actually also went on to become the founder of a company, or rather a project called Polkadot and Kusama. So, just for a little bit of a reference there, we also have Joseph Lubin, who was a part of this initial team, who went on to essentially run this company called Consensus, which was a company that built more projects and ecosystems and that bought different things on the Ethereum blockchain, essentially. And we'll talk a little bit more about consensus later. We had a man named Anthony Diorio. I actually don't know much about him, or Mihai Alisi. I don't know anything about them either. And then one of your favorites, Charles
Charles.
Hoskinson.
Yeah, Charles is my guy. I think he's just hilarious. He's honestly one of my dream guests for the show. We'll get him on here in the coming months. I can feel it. And he's the founder of Cardano now, and they largely had a falling out over belief systems and how to build this thing out. And Charles basically took what his belief systems were and he took it to a new place and he built that on Cardano, which we'll walk through in a future episode. But for the purpose of this conversation, this is a team of very heavy hitters. Like these are like the Avengers of crypto. Okay, like this is a big team, which is why Ethereum is what it is today. Is they had some incredibly smart people working on this thing.
Yeah, man. And speaking to like the Charles Hoskinson having the philosophical kind of differences, it's actually something that we see a lot in the early days of crypto. Because it was so early and there were so many different directions that you could take things. And because there's just so many different components of how to do this, right? Like these are engineers. And so they're thinking about these things from a very high level systems and governance level perspective and having this ideas around like, um, not only in the now, like how should these things function, but from that point forward, right? These are blockchains. So however they're kind of developed is usually how they're going to persist into the future. They're thinking out 100 years from now, hundreds of years from now,
That's a
right?
fantastic point because it is such a high stakes decision if this ends up being what is adopted. Most of the
Hmm.
pain points that we see economically, I think there are some evil actors out there, but I think a lot of it is just flawed systems that were impossible to extrapolate when they were being created. And the current people who are paying for it are the people who had no involvement in its origin. So that's a great point. Is that the stakes here were very high, so naturally opinions went different ways, and it resulted in some falling out of people because the stakes were that big. Like, I can't think of anything higher stakes from a professional perspective than deciding this stuff.
Exactly. I mean, like if what they're doing is as important as they believe it is, then they're charting the future of all of humanity.
Seriously, dude, and that's not even hyperbolic. That's not.
Yeah. So it's a crazy thing. And we saw a very similar situation with the Ripple ecosystem where you had David Schwartz and Chris Larson, and then they had Jed McCaleb, who then went on to go found Stellar because he felt that there was a different approach to working with the banking system in order to create these new decentralized technologies. So yeah, man. That was kind of some of the most important things that were happening in that early foundation sort of ecosystem. And by the way, all of these people together, they created the Ethereum Foundation, which is a Swiss nonprofit to guide development. So this is where things get really fun because like the mechanism through which Ethereum itself became a thing was a little bit different than how Bitcoin worked because Bitcoin, it was just kind of like mined from the beginning and it was the whole proof of work process from the entire beginning of the whole thing. But with Ethereum, in 2014, they launched one of the first crypto initial coin offerings. I mean, this was the first initial coin offering. And so what they did was they raised money, which was in the form of Bitcoin, actually, funny enough. And it was around $18 million worth of Bitcoin, which is 31,000 Bitcoin at that time. And they exchanged that for selling their Ethereum tokens. And this was making it one of the largest crowdfunding projects in crypto history. Obviously, until that point, there really wasn't anything like this. So this was pretty much the first initial coin offering. And after that, on July 30th, 2015, the first Ethereum version was called Frontier and it went live. And so, anyways, the thing that's important to note about like this ICO thing is like the question becomes whether or not this was a securities offering because you had these people who came together to create this decentralized thing in the name of a nonprofit foundation, but they raised money from outside investors, potentially with the expectation of profits on behalf of the efforts of others, which is the Howey test. And they have now, essentially promised people that they'll make money from this thing. Now, uh, the reason this really ends up coming up later is because we actually had in the United States a man named Jay Clayton who went after Ripple for basically doing something even less like as intense in the form of is this a securities transaction or not than what Ethereum did. Like Ethereum did a whole ICO, which was like they literally just raised money from the public. With Ripple, it was a little bit different because they actually started to sell their securities to private institutions, right? And so it was a little bit of a different game than like, oh, we went out into the public and started selling this thing for everyone to buy. So, anyways, the reason that ended up being such a controversy is because Jay Clayton, who was the SEC chairman in 2020, on his final day in office, he actually filed a lawsuit against Ripple right on his last day. And everyone was like, wait a minute, what is going on? And on top of that, he had come out earlier, I think maybe a few years before, and had given Ethereum a green light. He was like, on a public stage, he said that Ethereum was not a security. The way that we deem it today, it's not a security. And the problem with that was that he didn't specify that this was his personal opinion. Right. And so this like came up in court cases and everything where he was like having to describe that, like, oh, this was just my personal opinion, but you work for the SEC and you're speaking on stage at a place and like people are going to take that as like that means it's law. It's cool. So you've given guidance, but then you've taken it back and then sued someone who actually did technically less of a securities transaction offering than what Ethereum did. So, anyways, just some of the back history on some of the controversy around this that wasn't a controversy at the time, but later it became a little bit of an issue.
That's good tea. Yeah, that's some drama, and that's one thing that you will find the deeper that you go into crypto is how much politics there is everywhere. Like there's a lot of gamesmanship being played because the stakes are so high. And I think that a lot of people who saw this, they saw the significance a long time ago. And so I do think a lot of the politics were done deliberately to keep that stigma of like fake money attached to crypto. Like I think a lot of that was deliberate. I don't know who wanted that to take place, but it does certainly seem like that. Maybe it's from ignorance, but a lot of these people involved are too smart for me to think that's possible. So, a very good point.
Yeah. We'll never be able to live down Gary Gensler, who then stepped in after Jay Clayton at the SEC and his tirade against crypto after having actually been a professor of blockchain and crypto at MIT, right?
Wow.
So it's like he knows what he's doing, he knows what he's talking about. And he later came out to say, I believe very recently, this was like a couple months ago or something, a month ago, he was like, oh, actually, yeah, I do own Bitcoin.
Wow.
Anyways, moving on a little bit to the story here, because now we can talk about, all right, that's some of the politics, some of the like financial things that were going on. But in 2016, we had a really major event with Ethereum. And so there was this decentralized venture fund on Ethereum called the DAO. And so basically, what was happening here is you've got one of the first kinds of cool applications of smart contracts where you have a decentralized venture fund, meaning that people can essentially like allocate their money to this venture fund that will then be able to make decisions based upon the votes of the people that are giving their money to this decentralized fund. And this is called a DAO, or a decentralized autonomous organization. So this was the first ever DAO that was released on Ethereum. And they actually raised over $150 million in Ethereum at the time, which made this one of the largest crowdfundings in history. Now, in June 2016, a hacker actually exploited a flaw in this smart contract and siphoned off around $60 million in Ethereum. And
Dang.
so, yeah, it's crazy. It kind of like blew up the whole thing. And the most important part of this was the first time, really, that one of the first times in blockchain history where the communities actually had to come together and decide what they were going to do next,
Mm.
right? Because most of the time, you're not having to get to this like 51% agreement thing, right? And like make a decision around the future of the protocol. But in this situation, that's what happened. Essentially you had half of the community that was like, whatever, like, let's just move forward. But then the other half said, no, we need to like roll this transaction back and do like act like that didn't happen, essentially. And so what the Ethereum community actually did, Vitalik and others, they pushed for a hard fork to reverse the hack. And so a hard fork means essentially you have a blockchain that has one major line, but instead we kind of came to a crossroads where we need to decide that we're either going to continue flowing forward with what happened, or we can hard fork and create this other thing that is still Ethereum, but it's technically the new version that excludes that transaction essentially that happened, and then just keep it moving forward from there. And so this is called a hard fork. And so the thing that was the original Ethereum, right, that got hacked is called Ethereum Classic. And the thing that got the hard fork and moved in a different direction is what is Ethereum today.
Fascinating. Yeah, that most people don't know that stuff. So that's really a cool story to share about how there like it wasn't smooth sailing building this stuff whatsoever. And that's not a small amount of work or like insignificant decision to make that. Like that's a very, very big deal.
Yeah, because it also just changes the whole ethos of this thing. It's like,
Mhm.
the Ethereum Classic people are like, dude, like, no, you can't just roll back a transaction. Like, that means that it's not decentralized, the way that we want it to be. It's not immutable, right, in the way that we want it to be. So the purists were like, no, I'm an Ethereum Classic guy. But in reality, when Vitalik, right, supports the decision to do a hard fork, that's kind of when I think you get this once again, though, it's like, okay, well, if Vitalik gets to just be the one who's responsible for what decision gets made, then how decentralized is this really? But that's kind of what
Great.
happened.
Yeah, great point. Good to know. Definitely some things that you want to consider. And so that brought us up to where there started to become a lot more adoption. So
Mhm.
do you want to run through the different significant milestones there?
Yeah. So, okay, this is a fun time. So, 2017, we had the ICO Mania. And what happened here, this was honestly kind of funny because I remember we had like people like T.I., like Kim Kardashian, and like all these people that were launching their own tokens and doing initial coin offerings on Ethereum. So people were raising millions and millions of dollars for these new projects that were going to change finance forever. And like literally, like the no developer in sight, right? Like no one knows what they're doing. um, and so a lot of these people actually ended up having lawsuits from the SEC or any other agencies actually coming after them because they were raising money for complete vaporware, meaning that there was nothing actually there that was being developed upon. It was just selling a white paper in a dream. So eventually, the SEC and other organizations kind of came after these people, sued them for millions and millions of dollars. And on top of that, when you get sued or attacked by the SEC, they can bar you from ever participating in securities offerings ever again as well. So it kind of prevents you from being able to be in that capital raising space. And
Wow.
some of that stuff's criminal as well. Some are civil, some are criminal cases, and so you got other stuff you got to deal with too.
Dang. Yeah, that's crazy. So a lot of people coming in. That's really the first thing that brought in mainstream eyeballs because of the names and figures attached with it. And then uh, so the next point you have here is in 2018 to 2019, started to scale slowly after that mania, and it remained the leader in smart contracts, even though there was a lot of congestion and high fees. That was a very consistent theme that was talked about a lot. Was like the congestion and the incredibly high fees. Like some people were paying obscene amounts of money if you converted it to dollars and to facilitate transactions. It was pretty absurd.
Yes, especially back then. Like the thing about Ethereum has been that it's kind of continued to have this problem even through the changes that it's had. But with this ability to have this smart contract functionality, one of the trade-offs has been that you've had to pay for that. Um, and so the way that this works, by the way, for people who aren't necessarily super familiar, is that on the Ethereum blockchain or really on any blockchain, you're going to have a transaction fee that you pay in order to transact on the network. And in Ethereum, this is called a gas fee. And so there's a little bit of Ethereum that you're going to pay for every transaction that you do on the network. And now, what can be an issue here is that if the transaction fee is higher, for instance, than the actual value of the transaction that you're doing, then it kind of becomes uneconomical to use the blockchain, right?
Totally. Yeah, definitely a massive issue that you got to consider. Even in my crypto history, I've paid some wild transaction fees due to congestion on the network that it definitely hurt a lot to pay that just to facilitate a transaction. Because the irony of it is the long future of doing all this stuff should bring prices down to facilitate a transaction because of how bad it is in the current system, the Swift system. And so that to pay these obscene fees in something that's supposed to eliminate fees was definitely a hard thing to do. But they've done a lot of things to try to remedy that situation.
Yeah, and then it ended up being to where like the only people who could really move around in this ecosystem, this was pretty much from 2017 until 2020-ish, were the whales. It's like unless you have a large amount of money that you're moving around to where the gas fee is still negligible, then like you can't really play. And that's been a big issue.
Totally.
Mhm. Yeah.
Definitely. Yeah. And then that brings us to DeFi Summer, which happened in 2020. And here there's going to be a lot of very important concepts that really broadened the application of what Ethereum can really do.
Yeah, man. DeFi Summer was a wild time. Essentially, this was when decentralized finance and the major protocols in that space became, I guess, in the crypto world, mainstream. And so you had these applications like decentralized exchanges, such as Uniswap, where you can essentially exchange any crypto on the Ethereum blockchain for any other crypto on the Ethereum blockchain using a decentralized platform to do so. This could be, for instance, you trading Ethereum for USDC on the Ethereum blockchain, or even trading your Ethereum for any other token on the Ethereum blockchain, such as Tether or anything else. And Uniswap also during DeFi Summer actually ended up doing an airdrop. So an airdrop is when essentially a protocol will actually gift tokens to your wallet, right? In exchange for usually you having had done something. So, for instance, Uniswap has a token today, but back in 2020, there was no token for Uniswap. It was just an app. And so, when you use that app, what happened is that all of those transactions are being tracked on the blockchain on an immutable record, right? So, what they did was they said, as they raised money, as soon as Uniswap raised money from VCs and things of that nature, and when they raise money from VCs, these VCs buy a certain amount of the tokens essentially that they're going to later release. So let's say they raised like, $5 million in terms of tokens. They raised $5 million in dollars that they allocated towards giving, let's say, 20% of all the tokens that we're going to create for, they gave those tokens, 20% of those tokens to a VC. And then when they actually go out and they're going to basically do an airdrop and release this token where they're going to allocate, let's say, a certain percentage of the overall tokens that they've created as an incentive for people who actually already used the protocol in the past. Essentially, the Uniswap team allocated, let's just imagine, another 10% of all of the tokens that they were going to mint to the people who had already used the application. And this was a reward saying, hey, thank you for using this. And now you have this token that you can trade around with. There's other cool incentives that they can kind of build out with that and so on and so forth. So, anyways, this was like a whole thing that was happening during that time. Like I got an airdrop of like $1,500, right? For just having used Uniswap at that time. And a lot of people did that, right? So there was just like millions of dollars that kind of just got airdropped. Now, quick caveat on that. I think that this could be the future in general of seeing even traditional mechanisms or even traditional tech companies like Facebook, for instance, could go back and say, hey, after all of this activity that you've provided and value that you've provided to the platform, we're going to airdrop you these Facebook tokens and based upon your level of activity. And then from there, you've got a whole new money system where everyone's already bought in, right? Whether they wanted to actually give their value up or not. And then the value of that token trades on the open market based upon whatever people value it at. So anyways, moving on from that, that was a big part of 2020 was just people getting airdrops for having used these DeFi protocols. Another big one at the time was one called Compound and another one called Aave. And these are decentralized lending protocols where you can actually lend out your crypto using smart contracts where there's intermediary other than the code itself. So I can earn interest on my Ethereum, by the way, in Ethereum, okay, without any intermediary involved. And why I highlighted in Ethereum is because let's say you wanted to give your money to get paid interest on these dollars that you're receiving. Well, those dollars go down in value over time. So yes, I'm earning 5% or even 2% on the dollars. But if the inflation rate is at 3%, then I'm actually losing money. But in the terms of earning interest on your cryptocurrency in crypto, right? If I lend out one Ethereum and I get 2% on my Ethereum, I end up with 1.02 Ethereum. And the price of Ethereum is growing at, let's say, a 45% compounded annual growth rate over time. So the return that I'm getting is not 2%. It's whatever that is plus the compounded annual growth rate of that asset over time.
That's super important for everyone to understand. A lot of people who are really attracted to crypto, like to an outsider, they're like, oh, like this is the riskiest stuff you could possibly be doing. But for those who were educated, they didn't really have to take on much risk at all because they were involving themselves in these DeFi activities that essentially allowed them to pretty predictably make money on their money. And that's also a big thing that you want to get educated on really quickly is the earlier you get involved in a lot of these things, airdrops have become a very consistent thing where if you show support or you use a tool or you get involved in different communities, they'll literally just airdrop you things like Keith mentioned, where you could just wake up one day and have a certain amount of tokens. Like Cardano is actually doing that with their new privacy chain called Midnight, where people who had Cardano, people who had Ethereum too, like I think it was a bunch of
Mhm.
different partners that they had, are just getting given airdrop as long as you register for it. you're just getting given midnight tokens. And that's a great way to align incentives to get the people who are already using this stuff to be advocates of a new technology, which is not easy to do. So the easiest way to do it is give them some skin in the game, essentially, which is a very, very big deal. And I think you're right. It probably is the future of easy to align incentives to grow mass adoption or even targeted adoption. There's so many things that can happen there. So yeah, DeFi, very massive deal. It's also, when we talk at the end of this in terms of the big figureheads that are here now, we'll go over and explain why DeFi is such a massive part of that.
Absolutely. Speaking on all of this and moving forward, like to wrap up the DeFi summer thing, at that time we got up to around like $150 billion in total value locked into these different smart contracts. So you had essentially, let's say I was lending out my Ethereum or I had like staked it in some sort of a liquidity pool. All of the value of all of that was over $100 at that time. And that was these different projects that were popping up left and right. And right coming into 2021 was kind of where we led into this NFT phenomenon. I don't know if you kind of want to maybe touch on that a little bit more, Ben, but um, I know you're bigger into the NFT space than I am.
Yes, NFTs I can definitely handle because I bought and sold those stupid JPEGs, and I still do to this day. So I am in this community. So NFT boom. Think projects like CryptoPunks, Bored Ape Yacht Club, Art Blocks. The most relevant now, I would say, is Pudgy Penguins is probably the most consumer mainstream one. But think even like Beeple, the guy who went on Rogan, who does digital art, like that's an NFT there. And so to explain what an NFT is, it stands for non-fungible token. And basically what that means is that it is proof of digital scarcity. So when people say like, oh, it's just a JPEG, or they'll screenshot one of my NFTs and be like, gotcha NFT. It's like, no, that's not how it works. We can prove that this is one thing through what we talked about before. Like a smart contract can basically, and there's, I'm going to butcher the exact specifics, but it can basically create the NFT and then also dictate who owns the NFT at any one given time. And you can't duplicate that because it is its own thing. So that really became very, very popular because it was finally one of the first fun things that people could do with their crypto, with Ethereum. So all these people had all this Ethereum on the sidelines, and on paper, they're like absurdly wealthy, but there's nothing really fun they can do with their crypto money. They have to bring it into the traditional world, and they're very anti-traditional world. So there wasn't much fun stuff to do. Then now NFTs became very mainstream in Ethereum, and these projects really became very big. So CryptoPunks has kind of become like the OG in all of this, where it's the most legacy, trusted, massive flex to own one of these things. I think even right now they're like 40 some odd Ethereum. And so like let me look up how much. I think they're around 42 ETH is the floor. So let me see how much that is in USD, because that's the cheapest price you could buy one for right now. So that's 182,000 US dollars, right? And so when people hear that number, it really makes you start to ask some questions, because everyone was like, oh, NFTs are dead. They're not coming back. Well, they didn't leave, really. So like the mania and the hysteria where anybody can spin up a project and sell it and make a ton of money, I don't think that will ever come back. But I do think in a very major way, NFTs will make a big comeback as more and more people start to become wealthy from crypto activities. Naturally, they're going to want the flexes associated with their community. We've talked about this on previous content you and I have, Keith, before, where like people always say how dumb these things are. Everything that rich people buy to project status or wealth is dumb, right? Like think art. Art is like, if you're talking about strictly utility, which is what people usually go to when they speak about something having value, art in theory would be the dumbest thing ever. But we are humans. We have this desire for so many things beyond this does this, right? There's a lot of things that people will spend obscene amounts of money for that you couldn't clearly explain what it does or what it does well. And I think NFT is just a natural evolution of that. And why also people really loved to dunk on NFTs was because the price tags were crazy. It was very good news. And also, people love when something crashes. So they love to ride that mainstream momentum. And so people love to dunk on people who were pro NFTs or made NFT projects, because a lot of people lost a lot of money. But the thing you have to remember is that even in the luxury art market, even in horrible economies, you're never going to experience a massive decline in art prices, within reason, of course, because if it's not a good price, the person who owns it will almost never need to sell it. And so in theory, the price gets maintained. But this was the first live marketplace of what is really status symbols or flexes. And so that's why a lot of people went because of understanding the psychology of what is the purpose of owning this NFT, there's people who tried to provide utility to the NFT, right? If you have this, it's basically a gateway into all the perks that come from this ownership. Bored Ape Yacht Club being the most obvious one, where it's yacht like club, and people really did get a lot of perks. They got additional NFTs given to them. They got access to certain things, the expansion of projects. They got for early dibs on it or free access to it. All those things, and I'm like deeply, weirdly obsessed with NFTs. But what got me obsessed was I was at a YouTube conference called Vid Summit, and I was one of the people who was like educating people there on behalf of vidIQ. And so people were coming up and talking to me, and because I had the shirt on, people like looked at me as like we're very silly as humans. If someone's got like an official shirt, we think that they're an authority figure or whatever. And like obviously I wasn't. I was trying to talk to everybody. But this guy who was a new YouTuber, as his attempt to prove that we were on the same level and that I should talk to him, he said, "Oh, don't worry, I'm cool. I'm an ape." And at that time, I wasn't nearly as deep in NFTs as I am now. So I actually stopped and paused, and I'm like, what? Like, what do you mean? Like, like we're all monkeys? Like, what are you talking about? Like Homo sapiens are monkeys? What do you mean? And then he's like, no, like Bored Ape Yacht Club. And I'm like, oh, like that's actually how you're going to come in here and like project your status in real life. That's what sold me
That's
on the
crazy.
concept. Yeah, that's I was like, wow, because I was already very curious in NFTs and I had bought one or two before, but even I couldn't fully legitimize the application of what this could mean to certain people until I saw that guy say that. So for that guy, very interesting character, I will say that. Thank you for that, because that really opened my eyes, and it's why I bought a pudgy penguin. Like actually, when I got home from that trip, I pulled the trigger and bought a pudgy penguin, and at that time they were 3 ETH. That was basically all the money that I had in the world. So I was like 12 grand Canadian at the time. And I pulled the trigger, and everybody in my life thought I was like the biggest idiot ever. And that ended up being the best investment I've ever made in my entire life. So I actually owe that guy quite a bit. But that's really like the grassroots of so what the NFT is, the psychology behind why it blew up so much, the headlines associated with it. But I want to talk and zoom in a little bit on the figures, because I think most people who have an opinion on NFTs, it's because of a figure they already knew who got involved. And everyone kind of got burned because the prices went down. And when people were uneducated on what this whole thing meant, what it could be, the evolution of it, then naturally, if the price goes down, it's instantly deemed a failure. And if you're strictly in there for financial means, then I can understand that. So Logan Paul is one of the biggest figureheads in here that's really attached to like NFTs being a scam. He started a project called Crypto Zoo that promised a lot and delivered incredibly little. So basically, what he promised was basically like, I'll butcher the specifics, but he's like, oh, promising that there'd be this futuristic game that is kind of like a modern day version of Pokemon that connects real world animals, and you would own the animals. And there's a lot of stuff that he promised a ton. He was super hyping it up and all of this stuff. And so where he went wrong is he didn't deliver on any of it. He raised a ton of money and support, and he didn't really fulfill any of what he had promised. The issue with why so many people got screwed with this is that when people try to do too many things at once, which is the case with these celebrities, they don't know enough to spot red flags, right? Like if they had someone like me or you with them, we'd be like, don't work with these guys who they ended up working with, who ended up screwing them. But that's just the nature of being new. And with this much money involved, it was a very bad decision in hindsight to do this. And that's why a lot of people have really started to dislike Logan even more for this, because I don't think he ever paid back what he had owed from people. And then what's his name? CoffeeZilla. I'm sure people know him. He's done investigations into this whole Crypto Zoo thing, and yeah, there's still a lot ongoing. I think most people haven't been paid back. Whatever. That's between them. But the last project that I want to zoom in on to really try to give people a fresh perspective on this whole thing is Gary V's project, VFriends. So why I bring up VFriends in particular is because Gary was probably the most trusted person who talked about NFTs the most, right? Because Logan Paul already had his own drama. I think most people who were a little more mature wouldn't look at Logan Paul as like a beacon of truth or a good choice for my money or investment. There was no implied association with good financial decisions between Logan Paul, right? Like that just wasn't a thing as much, which is why Gary got dunked on so hard, is because he built his whole foundation on basically making good decisions from a business perspective. And he's saying, like, basically buy my project VFriends. And to make it even worse, it's actually good if you fully can zoom out and see the whole plan that he was playing, but his NFTs are like really, really ugly. They are like hand drawn by him, and he's basically got the artistic talent of a 12-year-old. That's not saying I can draw any better. Mine would be even worse, but they're like really bad drawings. And so a lot of people are like, what the heck am I paying for? But they didn't understand what it was that he was doing, right? So the example that I always give is VFriends being ugly actually makes sense because if you think about, let's say, Pokemon, if you could see the first ever hand drawings of what became Pikachu and you could prove that this was that, how much would that be worth in the eyes of Pokemon fans? It would be worth an obscene amount of money, right? That you could prove that you own it and bring it anywhere that you wanted online. Like that would be almost difficult to put a price tag on. And so basically, everyone, when the prices came down, dunked on Gary and was like, see that you're an idiot. But he was playing the very long game of developing his own IP and universe, which is VFriends. And so, like, let's say hypothetically, he can convince millions of people to be diehard VFriends friends, which he's working really hard at. He has the most amount of money and the most amount of connections. He's kind of doing everything that he said that he would do that people are still dunking on him for because they don't understand, right?
Right.
And so he stopped talking about NFTs everywhere besides Twitter because he understood that he was just getting dunked on everywhere. Like for so long, he was just like, it actually really hindered his credibility short term, which I think he will kind of get a like a back to relevance moment when these things move in a very big way. And I think that VFriends will move tremendously. And full transparency, I own some VFriend NFTs, so I would be financially invested in that happening. But I do think it's kind of likely because of all the stuff that he's pulling off. They have comic books, they have trading cards, they have stickers, they have TV shows they're making, right? Like he understands consumer culture, he understands collecting, and really that's what he's trying to build out. So if he were to become successful in that, then the VFriends NFTs could become a big deal. And so really like what you said before I'll move on because I could go on this for hours and hours and hours, but it is the really important part here is the aligned incentive system that naturally happens through the technology, right? Whereas you said before how airdrops can be a way to basically reward adoption, usage, and spreading of that message, NFTs are the very same thing because as the ecosystem grows, everything aligned with the alignment vehicle becomes worth more, right? So I'm now financially incentivized to promote VFriends content because I hold a VFriends NFT. And everyone who owns any bit of the ecosystem is incentivized in that. And you can also align yourself at different levels of alignment. If you don't have the kind of money to buy one of the NFTs, you could buy a physical asset. Like I'm not wearing one of the hats. I actually have some VFriends hats. I should have worn them. But there's like they sell hats that are limited drops. They sell limited drops, collectible pins. They sell all this stuff, right? So there's just so many people that can be aligned with this. And why I think he can win in a very big way is because he can play long games because he has the most amount of money. He has the most amount of real world connections. He will be the trusted name to bring everyone to Web3 because it's the only name that people really know from the Web2 world that will want to finally be like, okay, this is real, right? And they're going to come in and who are they going to talk to besides Gary? And then the last piece is there's so much bad media out there in terms of people don't want to show their kids certain shows because they're worried about the political agenda behind that. Gary's trying to basically be the antithesis of that and just promoting good values to their core, which I think is something that will really resonate with most of his fans. And so the master play here is the parent owns the NFT, the kid loves the shows, but they're both aligned from day one to push this whole ecosystem forward. So that's really what NFTs are in a nutshell. I can go deeper, but we'll stop it there.
Yeah, I actually am like not a huge NFT bull in the terms of like the entire space that you kind of laid out, where it's like this kind of membership thing and digital art as well. Like I actually am very bearish on that coming back ever. But what I am bullish on is the use of NFTs as the definition of an NFT. And so I wanted to quickly tap on that. Um, a non-fungible token, the thing that's important to understand about non-fungible versus fungible is what the word fungible means. So when you're talking about, for instance, dollar bills, this is the easiest way to explain it. A $1 bill is also fungible for another $1 bill, meaning that they're essentially the same thing, even though it's two different physical items. And so a non-fungible token is a token that is a unique identifier. And on the Ethereum blockchain in particular, there is a specific standard called the ERC 720 standard, I believe it is, or 721, whatever. That is one type of NFT. There's also another standard for NFTs on Ethereum. I think it's called the 1155 standard, where, for instance, you have a class of NFTs. So, as an example, let's say in a video game, you have swords, right? So you might have a specific kind of sword on a video game that's called like the katana. Let's just say as an example. And the 1155 standard is that you can have multiple different katanas, but they are all of the katana class, right, of the NFT. And so therefore, like the singular katana that you have in your hand could be a 721 sort of unique katana, but the class of katanas is more of the 1155 standard. And in this situation, I tried to say that it's two in one, but usually they're two separate things. You either have a class of NFTs in the 1155, or you have a specific unique thing that is the 721 standard. And so, anyways, just wanted to kind of define that. And my thing is the NFT in terms of it being used as a digital identifier. I think that's the thing that I'm the most bullish on. I'm not saying that there's a way to invest in that in particular, other than being invested in the blockchain where that actually takes place. Um,
Mhm.
but but that's the thing about NFTs that I think is the most important is the digital ID and how that will play a huge role in how we access banking services and other things in the future as well.
I love that you brought up gaming because I think that's the most natural application that people can grasp the concept really quickly because in-game transactions and digital ownership has proven to be valuable in that landscape. Because I have friends that have spent literally tens of thousands of dollars on FIFA credits or on these mobile games, right? They understand like that this has value. So imagine if you actually owned the digital thing that you were buying and you could sell it or trade it if you wanted to. It actually would be transferable theoretically. And so gaming is a direct application where this will become very, very popular. Go ahead.
Yeah, and like I actually just had a good conversation with one of my best friends growing up about a week ago, and he was talking to me about how the reason that he got into crypto and the reason he understood it was because he played a game called Roblox when he was younger. And he was like, they pretty much did this. Like they had these exclusive drops, and like the things that people were buying back a decade ago are like worth literally like crazy amounts of money today. And he understood this mechanism of having like a unique limited space of things where you could invest in it, essentially, whether it was, with the in-game currency, which you could buy with real money, right? He was like, well, like this is real money in a sense, because if I can buy the in-game credits with real money, and then I can buy these items in the game with that money, then like, and then I can sell them later for the bucks in the game that I could then sell for real world money, then this is all real.
Mhm.
And so, anyways, the thing that I guess differentiates that from the blockchains is just having that decentralized, right? Because another thing that happened, this is actually wild and this is real. He said because he didn't log into his account over a few years, one of these limited items that he had bought about a decade ago went away because his account was deleted because he hadn't logged in.
No,
It's crazy. And so he was like, only
that's
now is
brutal.
that like even more obvious, like why blockchains are necessary, because in a blockchain that no one can just delete your account. You know what I mean? So anyways, that's kind of like a good parallel, and how a lot of people do actually start to understand the space is through gaming for sure.
One other one that I think may resonate with people if they aren't gamers would be concert tickets or live event tickets. So if you had, let's say, like a ticket that you had from like your favorite sports team when they won a Super Bowl or something like that instantly becomes a collector's item, right? And that can transfer over to, let's say, you love the niche band that really grew very popular. If you had the physical ticket from going to their first ever show or something like that's worth a ton in that community. Concert tickets will probably all become NFTs. And then you now have an asset as you buy the NFT that should hopefully make the whole ticket buying experience more efficient. If Ticketmaster can, like, if someone can deal with that, because the monopolistic practices there are crazy. But if you can enhance that experience, maybe it's Ticketmaster who does that. I don't know. But if you own something now, where and actually the NFL's already been doing this, so they've been sending you digital versions of your ticket. I used to be a season ticket holder of the Jaguars, and I would get like a NFT like ticket signifying the game that I went to. So as these become more and more mainstream, the implications of that are pretty insane because when you hold that ticket, it's now an asset that you have that shows that you supported whatever you wanted to. And if that band ends up growing, you now have an asset that you could trade or sell later. If that ticket ends up being significant for that sporting event, you could also sell that later and it can't get burned, you can't lose it, etc. The applications are pretty insane.
Yeah, exactly, man. I think the only other example I would also add into that is in the same realm is, like the royalties kind of thing for the artists.
Yes.
So let's say you mint your body of work as a song. on a blockchain, right? So now you have this immutable record of the song on the blockchain. Now, obviously, the song exists as an MP3 file, right? So anything that you do with the MP3 file, you can do. But what you could do is if you use a blockchain as the licensing platform for that song, then now you could have someone essentially use smart contracts to utilize that song or even potentially alter on top of that song, right? And then the distribution that's happening through the blockchain itself could be tracked. And so you could autonomously pay out, right? The people who are using this track in whatever way that they're using it based upon smart contracts rather than having to go through these publishing companies, the royalties companies, and so on.
Fantastic example. Yeah. So let's move on from NFTs
Yep.
to Ethereum 2.0 and the merge.
Yeah. So essentially in 2022-ish, I believe, Ethereum essentially moved from a proof of work ecosystem to proof of stake for scalability and sustainability. And so, like we said on the proof of work thing, the idea is that you're putting in real world resources in the form of energy slash electricity to solve this extremely complex equation. And then when you get that equation done, you will receive Ethereum or Bitcoin and on the Bitcoin blockchain as a reward. Proof of stake is an entirely different mechanism where instead of that mining mechanism, what you do is you put up a stake. So let's say, for instance, I want to validate transactions on the Ethereum blockchain. The way that I'm going to essentially validate these transactions is I'm going to put up a stake as a validator saying that, let's say I have 1,000 Ethereum. I'm going to put down 1,000 Ethereum as a stake. And what I'm saying is that if I lie about transactions over this network, then you can actually slash my stake or take away my stake that I've put up as collateral, essentially, for telling the truth. So the way that this works is you have different validators. They're all checking each other out. And if anyone's lying, then everyone else gets to kind of slash and take from them and take their stake away. So obviously the incentive is that you don't lie because otherwise you're going to lose all of your stake. And so when you're doing that, you also earn, when you successfully do these transactions, you earn Ethereum in the form of proof of stake, staking rewards, right? The word stake gets so confusing because of this mechanism being the original kind of thing of like you actually put down a stake and you earn Ethereum for doing that, for validating these transactions. And then there's like all these other forms of staking where you can stake into a liquidity pool or you can stake in other forms. So, anyways, just wanted to clarify that that's what proof of stake is you're putting up a stake. If you lie, you lose it. If you don't, you get rewards. So that they did this was because it was supposed to solve some of the scale that we brought up earlier. So with Ethereum and proof of work, actions are clunky, expensive. And so update was supposed to actually try to reduce the fees that were happening on the network. Now, in reducing those fees, you're also giving up some of these decentralization that you're getting from the proof of work ecosystem. Proof of stake is a lot more centralized. The thing about proof of stake is that the more that you have, the more that you earn. And so you have this concentration of power that kind of flows up to the top of whoever has the most Ethereum is going to make the most and become the most powerful actor in the ecosystem. Uh, Proof of work has its own vulnerabilities in that sense, but they're different. So, anyways, yeah. So in 2022, Ethereum actually executed the merge, transitioning from proof of work to proof of stake, and this reduced also Ethereum's energy usage by around 99.9%, which was a historic milestone in the blockchain. This is another concern that you have with proof of work is that it uses an insane amount of electricity. In some cases, people say, "Well, this is the whole point of it. It actually supports the growth and development of this thing." Because obviously, if you don't have that, then you don't have the security of needing these hard assets in order to create the thing. And the other side of the debate towards going for having electricity being used is that it actually kind of creates an incentive to create uh, renewable energy, right? Because if you can receive a reward that exponentially rewards you over time, then you want to get your energy costs as low as possible. And the easiest way to get your energy costs to zero is to have renewable energy sources. So it actually does incentivize the use of just efficiently that may be and as well as reduce transaction fees. Although this did happen to a large degree, it didn't really solve all of the problems.
Yeah, that's a big thing. The energy usage is a big thing that a lot of people who are anti-crypto, that's one of the narratives they really latch onto is the how much power it uses, but that's a really unique perspective to look at it, where it also does incentivize the improvement of the systems to get renewable energy, which is something that I didn't even really consider, which is really, really powerful too, which is a good counterpunch to that big time.
Yeah, and I mean we've just actually seen that play out in Texas. For instance, we've had like the facilities that are using wind or to power Bitcoin mining. So it is a real thing, whether people want to debate against it or not. So it's actually very interesting. around, does this actually incentivize energy production? And I think the answer is unequivocally yes.
Sweet. So then that brings us closer to today. There's only a few more updates in the timeline. You want to round those out?
Yeah, in reality, where we are today is Ethereum has gone ahead and continued to try to do these upgrades as the proof of stake network. No major things have really happened other than the fact that we've had these layer two solutions that have also been built on top of Ethereum over the past few years. This was already kind of happening in 2020 before the merge because it was already an issue. We were trying to find ways to get more transactions done on the Ethereum blockchain. So you had these roll ups and other L2 solutions that are essentially just like taking a bunch of transactions and then pushing them into one major transaction on the Ethereum blockchain, essentially to consolidate all of the fees that are happening for all these transactions that are taking place to the next piece of this.
Cool. Yes. So that's like a. Do you think there's anything else that we need to run through before we talk about the figureheads and the characters that are involved now?
No, I think it's a great place to kind of move into like the institutional adoption and like why um, Ethereum is kind of has like a potentially carved out a space for itself in the future of finance.
Totally. So you kick that off, and I'll pick up whatever you didn't.
Perfect. Perfect. So yeah, so like I said with Coinbase, I think building on top of base chain has, or excuse me, building out base chain as an L2 on Ethereum, like really says a lot, right? Because Coinbase is like the number one crypto company in the world.
Huge.
You know, big exchange in the United States, a publicly traded exchange as well, and so it's like for them to stake their entire, I mean, a huge amount of their resources on the future of Ethereum is a pretty massive thing. I've even noticed that they changed their wallet, their decentralized wallet base. And like this led to massive confusion inside of my community because I didn't even know that. I'm like, they're talking about base. They had the base wallet, the Coinbase wallet. And I'm like, what do you like? No, that's not a custodial wallet. And they're like, yes, it is. I'm like, oh, just kidding. But anyways, so that's just one example of like a larger institutional organization saying we're going to stake our entire future, a huge bet on the future of Ethereum. But this comes way after, honestly, some of the actual like TradFi, traditional financial institutions have also done so in the past. So just as an example, JP Morgan Chase created a Quorum, and this was like, I think 2018 or something. And this was a private version of Ethereum that was designed for banking applications. And this Quorum solution that JP Morgan actually created was then acquired by Consensus, which once again was kind of the original company that was built around Ethereum, trying to develop the Ethereum ecosystem, but as a for profit company. And so, when this happened, it was kind of like, okay, JP Morgan's kind of just in the space as well. And then JP Morgan also launched this application called Onyx, which was it was a blockchain division which runs the JPM coin and collaborates with other tokenized deposits and settlement solutions. And the tech over there was heavily influenced by Ethereum. Now, these types of projects, by the way, have gone like super underground. Like they announced them and then like never said anything about them ever again. So we don't really have a whole lot of visibility into what they're doing. But the way that I look at this is that these companies or these banks are building out these private Ethereum solutions. There was also a company called Hyperledger, by the way, that was by IBM, which was their kind of like their Linux of the blockchain space. And so they had all of these different organizations that they were working with inside the Hyperledger ecosystem. And eventually this Hyperledger thing, I think it dissolved. But anyways, all of that stuff was built on these private Ethereum blockchain versions. And so it's not saying that they're going to just that they're using the public, excuse me, blockchain of Ethereum, but in private, in their own little blockchain solutions, they're still using the same types of mechanisms as Ethereum and using things like Solidity, which is the programming language that's used in Ethereum. So if they wanted to take these applications and use them on public Ethereum, they could, right?
That's very important because that's one of the biggest things that Ethereum has going for it is that there is a lot of either direct approval of it because of its use or indirect approval because of things that people have said or associations. So a lot of people really do view ETH as like the safer, more established chain to do a lot of these things that we know are inevitable realities with our life in terms of conducting our life and financial decisions. And so there's a lot of people who are going to start hearing about it a lot more because the one thing that gets said a lot about Ethereum, which I think should make more sense now, is the whole concept of digital oil, right? Where you the the ownership of the oil, if it facilitates what's needed for the whole economy to run, then it inherently has value. And so if a lot of the world is running on Ethereum and Ethereum uses gas to facilitate transactions, then holding the Ethereum makes a lot of sense. So that's a narrative that you're going to hear a lot on the major news stations from a lot of people, because it's a concept that we as people have already all understood. And so they're going to continue to hammer that into you to drive the concept home. Another one that they're going to do is it's basically like the official stable coin chain. That's a lot of things that people are really going to harp on you. And why they do that is because the stable coins are being issued largely by banks or very big institutions. And so the implied association with something that's very trusted and is huge does a lot to fight the current stigma of crypto, right? Where if you already have this massive institution that people trust or they already have as their bank, and now they're saying, oh, we're using this, that legitimizes them almost instantly. And then also Wall Street. So a lot of the way that we conduct finance is very primitive, like even stock ownership and things of that nature. Although it may seem pretty on your phone, like the actual underlying mechanisms that make that all take place, pretty archaic compared to what's possible. And so a big promise here is basically bringing Wall Street on the blockchain and modernizing that whole thing, which could open up a can of worms in terms of what gets done from Wall Street assets and all those things. So those are like the biggest narratives that I think is important for you to be aware of. That's why they're going to be shoved down your throat. And
Yeah.
and there's also a guy I want to talk about. But if you have something else, add on to it. If not, I'm going to talk about Tom Lee.
Yeah, just a final thing on all of that. Like the Wall Street tokenization narrative is like very real, right?
Hmm.
At this point, we have live projects that are on Ethereum. So we have asset managers and banks that are running different pilots on this stuff, but also they've launched different things that they've actually announced on the Ethereum blockchain or Ethereum derived systems. So BlackRock, for instance, building tokenized funds. Larry Fink calling tokenization the next generation for markets and has been very open about tokenizing securities transactions, especially this year as we've gotten legislation in the United States coming through. By the way, Larry Fink is the CEO of BlackRock, one of the largest asset managers in the world, the largest asset manager in the world. Franklin Templeton also issued a money market fund on Ethereum as well. Goldman Sachs has been exploring digital assets using Ethereum-based systems. Fidelity and Invesco have been building Ethereum-linked product and custody solutions in public. They're saying this out loud. So I just wanted to add that.
Totally. Yeah. Very good point. And the whole ETH ETFs is another big thing too, where these ETFs are created to basically eliminate the need to understand a lot of things to hold the asset. And so what they've done is they've created these, and they've done incredibly well. Because let's say my dad, for an example, like he is a guy who ran a construction company. He's done well for himself, but he doesn't want to learn any of these things when it comes to creating a wallet, using a decentralized exchange, getting it off there potentially, like all of these different things that you have to learn if you really want to be in the weeds currently with crypto. Whereas an ETF, you can buy the ETF where you buy your other stocks or other ETFs and hold it there without all the other layers of complication, which is why that's just been sold so well. And I think there'll be more inflows from retail coming in as they understand the concept. Because when people watch things like this, they'll be like, oh my goodness, I need to be involved in this. What's the easiest way that I can do that? And I think that's going to be the most natural, obvious one. Go ahead.
Yeah, and just final thing on that, like the level at which this is being legitimized in the securities industry states is that these providers that are filing for Ethereum ETFs are actually at the point where they're asking the SEC to be able to pass through the earnings that they're getting from staking their Ethereum over into their investors. So that these investors not only get the ETF that tracks the price of Ethereum, but it can also be essentially a dividend paying ETF that's based upon the earnings that they're actually getting from the staking activities in the back end, which is wild.
Insane. And how do you say no to that? You
It's
can't.
like if you do, you're really messing over your people. The SEC will then be exposed for what it is, which is that it is keeping investors from getting access to investment opportunities. So,
Exactly, right? And so it'd be a really bad look if they say no. And then as the investor, if you are given access to that,
okay,
how
yeah.
how could you not say how could you not take advantage of that, right? On both sides. I think that was a great point that you made, that the optics of it would be pretty horrendous, especially as more and more people get educated in terms of what they said no to, which is really powerful. So love that. Definitely,
Yeah.
this one you may want to rewatch this episode because Keith's dropped a lot of stuff that if you catch it, you'll find other things.
But yeah, to your point too, though, right? It's like you get all the benefits of crypto and blockchain, right? You get the yield and everything without having to know anything about it. Oh yeah, that's a great offer, no doubt.
Yeah. That's a no-brainer. And so the last points that I want to wrap this episode up on to not overwhelm you too much. And also, we're live every Tuesday and Thursday at 12 p.m. EST. This episode was pre-recorded just because I'll be traveling on the day we would normally be live, but we'll be back to our lives on noon on Tuesday. So definitely click the subscribe button and hit the bell button because you actually will get notified if you click the bell button as to when we go live. But the points that I want to wrap it up on are the characters involved, because I definitely love to study people and characters and character development, especially because I think that is so deeper connected, or more deeply connected than people realize when it comes to finances, because finances is run by people. People are operated and run by stories. So one of the biggest obvious ones is Eric Trump. So Eric Trump is Trump's son, I believe, and he is very, very vocal about his support for crypto and the administration's support for crypto. The narrative that they really use is the fact that they were debanked, apparently. And so basically he pushes that as a narrative that I think will really resonate with their core people, because it's kind of like an anti-establishment narrative that people can really roll with and rally behind. And so he's going on news station after news station after news station doing that. And I'm sure in not too long, he'll be going on podcast after podcast after podcast. And so he'll be spewing that same message and explaining why he's so supportive of it. He's actually even come out publicly and tweeted before, ETH looks good here, or buy ETH right now, basically. He got clowned on for that quite a bit because the price then dropped a lot. But if you'd been zooming out, I think that may have been solid advice, especially if he's this deeply involved in the people that would make the price go up. So definitely something to consider, and expect to see him a lot more. The next person I want to talk about is Tom Lee. And so Tom Lee is an important person to discuss. I'm going to share my screen here to give you just a visual for who this guy is, because when you see him popping up on your screen, on your news stations and all this stuff, I think that it is important that you have at least been introduced to the guy. So this guy is Tom Lee right here. Why he's so significant is because if you know anything about Bitcoin, you've probably heard of Michael Saylor before. And so Michael Saylor really revolutionized the concept of a Bitcoin treasury company. So a company that really manages their business and grows their business through the growth of an asset, which is Bitcoin. And so that's his whole thing. That's why he is the Bitcoin guy. That's why he always wears the black shirt with the Bitcoin logo on it. That's his whole shtick. So they've legitimized that business model already. It's been wildly successful. It's done well to date. Now, this guy, Tom Lee, is doing the same thing, more or less, for Ethereum. And so for a lot of the things that we talked about, there's probably a better story to tell to a lot of people who aren't crypto people in this world, right? In terms of selling them on Ethereum, the benefits that Ethereum has that Bitcoin doesn't, and how he's also a Wall Street guy. So he's got a lot of proven track record, a lot of success. He's been right on a lot of calls that people didn't agree with him on. So he's kind of the perfect voice behind this to spread the movement, to get mass adoption from the people who are currently holding the money. And because he does have that proven track record, it's going to be very effective in getting the people who ultimately call the shots to at least listen. And then once they listen, like we talked about before, it becomes almost impossible to say no to when you're comparing it to the other things that are available to you and also what's taking place around them. So that's Tom Lee. I can't remember the specific name of his treasury company. Do you remember, Keith?
Yeah, it's called BitMine. So just quick thing on this for people who aren't aware. Michael Saylor and his company MicroStrategy, that's now called Strategy, and Tom Lee and his company called BitMine are essentially, what they're doing is they're going out and they're actually raising money from investors to go out and buy these assets, these crypto assets. For Michael Saylor, it's all in on Bitcoin. For Tom Lee, it's all in on Ethereum. And the goal here is to acquire as much of a percentage of these assets that they possibly can. And so, the thing about Michael Saylor is, like, he did a lot of different unique mechanisms for the raise, right? He's done equity raises where he's just, offered equity in the company for people to kind of give them money to go and buy Bitcoin. He's also done these extremely complex, not extremely complex, but extremely sophisticated debt offerings where people are giving money to him in the form of a loan. And then they're able to actually go and take that loan and go out and buy Bitcoin. So it's kind of like a leveraged Bitcoin purchase opportunity. And the goal here is to strategically raise as much money as they can to buy as much of these assets as they can without blowing up, essentially. Now, Michael Saylor has done an incredible job of managing this process over time. Tom Lee has a lot of experience in the hedge fund world. If he can pull this off, incredible returns that they're going to generate for their investors over time. The question for investors is, the reason rather also this is such a unique offering is because also Michael Saylor has done a preferred equity thing where you actually get paid a dividend based on this, which that's huge, right? You can earn a dividend on your Bitcoin, which is something that you can't do really. So anyways, it's a wrapper that institutional players can invest in too, because like they may not have the go ahead to invest in crypto, even in the form of an ETF that might not be on something that they're allowed to do. But when it comes to these companies, like technically it's a company. Now, those companies are going out and buying Bitcoin on their behalf. And that could be the way that someone like Mark Moss, right, has talked about how this could be the way that institutions and all the big capital actually flows into the crypto market is through these crypto treasury companies, because they already have the green light to buy companies. And these companies are then going out and buying the Bitcoin. So sorry, I just wanted to kind of add that caveat.
No, you never got to apologize. That's all really good information. And they're really making us ask the question of how do we redefine how we even value companies, what companies are in the first place, right? It totally changes the whole structure associated with that, which makes it a very, very big deal because these guys are really pioneering something that hadn't been done before. Michael obviously proved the concept with Bitcoin, and Tom's trying to take that even further with Ethereum, with the benefits that it has uniquely. And he's also thrown out some pretty crazy price predictions. Where he's talked about a lot. Like, I'm trying to find a video where he talks about it, but I've seen him say like 15K. I've seen him say like 60K over a long enough time horizon. He's definitely thrown out some big numbers. And if they turn out to be true, then Ethereum investors will be very happy. None of this is financial advice. We're trying to give you all of the tools to make your own decision because that's the most important part. We're just trying to give you the specifics in terms of what's going around the ecosystem.
Yeah, absolutely, man. We'll see how it all plays out. I know that what Michael Saylor has done is extremely um, it's taken an extreme amount of savvy. And
Yes.
he's an engineer. Oh my goodness, what do you call it? The engineer that he's literally a rocket scientist. So just so everyone knows.
Yeah, and he's also got a lot of balls too because he definitely was early, and to really win in a big way, you kind of have to be the only guy saying something. And so he was very adamant in doing that, and he would go on the major things, podcasts, TV stations, etc., and spew the same message. And there's this really funny compilation of him where before every time he's about to say something that's so obvious to him, he goes and then he gets into the point. It's really, really funny. I strongly recommend. I'll try to find it really quickly. But for anyone here, if you've had any questions throughout this, like Keith already said, let us know in the comments and we'll do everything we can to get back to you. And also be sure to be in here live on Tuesday because we will be back then.
That's right.
Yeah, I'm trying to find it. Uh, I think I found it. I think I found it. Okay, cool, cool, cool. So I'll share this with you guys as a nice little wrap of this thing. So let's share my screen. Here we go. Okay, so the thing is Michael Saylor needs some rest. Let's hopefully this is the video. So good.
Sure.
Do is constantly growing.
So why that's so important is because if you can think to your own life when you knew something unequivocally and it was so obvious to you and the people around you are asking what is a silly question if you even remotely grasp the concept, that's the exact response you get. So like in my life, whenever I explain things to my family, because I operate in an online world, I'm having to do that like all the time. So I really sympathize with this situation. And that just only further illustrates to me the conviction he has in what he's doing. Obviously, the money does that pretty obviously, but I can totally get that exact experience.
Yeah, man, 100%. And just to round off with my claim that he's a rocket scientist, he's considered a rocket scientist because he had a double major in aeronautics and astronautics at MIT and held an Air Force scholarship. So he's not a professional rocket scientist, but he's that level of genius. And that's
Yes,
why he's also huffing and puffing. He's probably huffing and puffing about a lot of different things when it
totally.
comes to, dealing with
Yeah.
us normies.
Smart, educated dude, way smarter than us, or at least me. And he's definitely got a lot going on. So definitely a figure that you should pay attention to, and one that's going to become very mainstream. He's already huge in crypto circles, but he's about to become huge in every circle. So that's our Ethereum episode. We'll be covering each of the top 10 projects for the most part in episodes just like this. So again, make sure you're subscribed to the channel so that you see those as soon as they come out so that you can make the decisions that make sense for you. Anything else that you want to throw in here, Keith?
I think that's it. Looking
All
forward to
right.
the rest one. Yep.
Let's get it. All right. Appreciate it, guys. We'll see you on Tuesday.
Peace.
Peace.